All right, good evening, everyone. I'd like to welcome you out to the Hurley Investments midweek commentary. Um, I'm going to give you a little bit of reflection today, a little bit of reflection on what I was thinking as I woke up, saw the market, what was going on. I enjoy the comment from Ken Fisher. Not a big fan of Ken Fisher, but the comment is, what is the most common investor mistake? Trading, getting in and out at all the wrong times for all the wrong reasons. You guys have heard me. I'm going to remind you one more time. What solves this issue or this problem? What solves the timing problem in trading? Abraham, my specialty. Collar trading. There you go. So Dan knows where I'm going here. Trading. I can honestly say I've never missed an up day in the stock market. Anything I make on the way down is a profit as stocks come back up. And yes, the long put allows me to sleep at night knowing I can't lose everything when the stock market is closed. So does that mean that I have my long put in place all the time? It certainly does not. And the neat thing is, Abraham, what if some stocks don't come back? That's okay. With the long put, I still didn't lose all my portfolio. I may have lost 5 to 7% of that portion of my portfolio. And hopefully, if you do some due diligence, you'll be able to see way before a stock goes out of business that that is not a good stock to be in. Also, Kevin, I got in a good stock and then it starts to go out of business. All you have to do is add a second long put, like on Bear Stearns, or a third long put on something like Bear Stearns, and as the stock goes out of business, you still make a 30% return on literally a company that was frozen and went out of business. Not worried at all about a stock going out of business. And that normally becomes the reason why I'm comfortable in today's stock market, and I'm comfortable expecting and excited to going through another 2008 experience, I guess. Now, I'm going to just bring some of my thoughts this morning. As I woke up, I literally sat and I took a look at the stock market, and my thought process was, how in the heck is our stock market still going up? As a money manager, I spend a lot of time going over portfolios and positions and reasons why I'm getting in, how I'm making money for people, if I'm running under their risk tolerance level. I go through a lot of worry is where I'm going to be getting at here. And as I looked at our stock market today, I felt, well, wow, it seems really frothy. It seems like we're at the top of the movement of the market. For the life of me, I can't find a reason, especially over the last week and a half, why our market's still going up. I went through a little bit of a checklist, and my checklist really was nothing more than saying, hey, you know what? To be 100% honest, how's our market recovering with how's our market recovering with 5 quarters of negative earnings for the S&P? I got to be honest with you, as I did my bit of research, I don't understand how you don't fight the Fed, but I don't understand how the Fed free money is helping our market. It's already gone through the system. All the fund flows show major outflows right now in our stock market. In fact, we haven't had a truly inflow in a quarter of funds in quite some time. Junk bonds recovered for some unexplainable reason. They really fell hard, 20-25%, yet they're back up. Can't explain that. Short covering doesn't give you a 12% comeback or V-shaped return in the stock market. Valuations are stretching at all-time high of the range right now. I normally want to give some explanations to some people on what's happening in the stock market and why I would be comfortable or even be willing to put positions on based on current movements, current market conditions, the whole 9 yards. For some of you, last night I sent out just an update on where we are in positions, why I like certain positions, and it's interesting because I can justify getting into a Disney. I can 100% justify being in Disney here in the near future. I'll be honest with you. I think it's been beat up. It's a bit oversold. So I think I've got an opportunity to be in a good quality stock at a cheaper price than it currently trades at. I like Visa. I think Visa is a recession-proof, interest rate-proof type of stock. And I felt so strongly about it that, we added some shares here recently. Pretty interesting. I had a client of mine send me the 5 stocks that everyone should own for the next 10 years. Apple, Facebook, Visa, Disney, and Nike. And for most people, I've got all of them in there except for Nike, yet I kind of chuckled because I know Jeffrey trades Nike. What I know is that I don't understand our market's movement right now. I can't justify the movement up, especially in a sell and may go away type of scenario that's coming up. I'm a little bit jittery on our stock market today. All that means is that I'm sitting here looking at the stock market and saying, when I don't understand it, I'm going to go and protect. And that's made a decision for me, because if I go down to how I'm going to trade, and I told you last week, I think I'm kind of set. My question is, do I go ahead and do I roll some positions up? So I think I'm going to prepare for earnings, and I'm going to do some math, and it's going to be okay with me to roll some long puts up to protect at a higher strike price. Because, and I can't predict the future, I don't know timing. I'm going to 100% agree with Ken Fisher's comment. I don't understand what's going on in the stock market. I'm to the point where I don't have a catalyst, a reason, an understanding, or even a justification to say, great time to start putting new money into positions. In fact, for some new clients that I received, in all honesty, Apple, Visa, Ford are some Disney and Ford are some undervalued stocks that show some great upside potential, but I don't have a good reason to truly be in anything else. I couldn't tell you or justify some other positions at this time. So for that reason, I'm a little gun shy, a little not certain where I'm going to go and what I'm going to do. other than collar trade, because a collar trade takes timing out of your hands. In fact, I even had a friend from Goldman Sachs come and tell me, you want to take market risk out of your equation for trading, Kevin, your collar trade, as you so call it, is a great way to free up portfolios from market risk. Can you have your long put on 100% of the time? You certainly can. But if you do your mathematical calculations, you really need a stock to be moving 14 to 28% to justify always being protected. You're overpaying for protection if you're looking to grow a portfolio. Any questions or comments about what I'm trying to say here? Any questions or comments you guys have about what I'm trying to say here? It won't hurt my feelings if you go, Kevin, I don't understand anything that you just said. Anyone want to make any comments on what I'm trying to say here? Be careful. There you go. Maybe you can go deep on the period. You don't have to put puts in place. Well, puts are your true protection. I guess I'm going to say, Abraham, puts are your true protection, because going deeper in the money or for a longer period of time like leaps doesn't necessarily give you protection. It just gives you an opportunity to have more time for things to possibly come back, for things to maybe move the way that you want it to. But that doesn't necessarily mean that it's going to, not protection. What considerations on timing here? Don't try to time the market. That's the simple answer. Don't try to time the market. The beauty of the collar trade is that you don't have to time the market. All you've got to do is time earnings. You got to protect yourself when stocks usually will go through one of the most volatile time periods while you own them. But timing is foolish. I have yet to find someone that picks tops or bottoms with any consistency. I've yet to see support and resistance truly work on a consistent level or basis. Jeffrey's amazing in his spread trading, but even Jeffrey gets that timing wrong. I collar trade. So I'm going to take the timing out of the trade. Did that happen when the stock's went down without long puts? What happened? I haven't had a stock that went down significantly, and I guess that's defined on each person, but I haven't had a stock that's gone down significantly without putting long puts in place. I may have been late to the game, and I'll be honest with you, I may have been extremely late to the game a couple times. But when I was late, I found the time and the money in the portfolio to go ahead and add the long puts and get those in place. But it doesn't mean you always have to have them on 100% of the time. I missed some of Disney's downward movement. I decided, you know what? Star Wars, it's bullish. I don't necessarily need to have long puts on Disney. Oops, made a bit of a mistake there. Wish I had long puts at Disney from the 115 drop down. You know, in all honesty, I missed $10 of that drop down. I made a quick comment, and I noticed I had an issue as I wrote out a little bit of a recap on what's happening. I made the comment, don't forget that is a tax break, and there's one word that was taken out of there. For 70% of the GDP since it's made of consumer spending. I hate it when I miss something that comes out of my recaps, but the fact that gas and oil is cheaper, at least much cheaper than the highs by over $2, that's supposed to be a tax break for the American public. Lower gas is supposed to be our tax break that causes us to literally go spend more money. It's supposed to be what's helping the economy grow and pick up from this anemic recovery. But you know what? People have not been spending their savings on gas and purchases. In fact, pretty interesting, because I made the comment that I think the consumer spending that should happen with lower gas prices, because that literally is saving us, in my opinion, 50%, sometimes as much as 40% of the cost in our gas from where it was 2 years ago. But the consumer spending's not picking up. Now, yes, consumers paid off some debt. And yes, consumers went to more savings. But there's a division. There's a large portion of this free tax break because gas is so much cheaper, blah, 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 blah. I sound like a politician. That honestly, I think is going to higher healthcare premiums. I really want to let people know, hey, you wonder where the consumer spending is? I know my healthcare got more expensive. It may be available for everyone. It may be more accessible for everyone. But I can tell you, my healthcare became more expensive. So for the politicians that wonder why we're not spending more money, well, I'll tell you, the money that I would have saved and be spending on things in the economy, I personally am spending on higher premiums for healthcare. I'm not saying that's where everyone's money is going, but I made the comment in my little recap that I do wonder where it's going, and I know where mine is going, and it's not going into boosting up the economy. It's going to a health insurance company to literally pay them more money for nothing each month and a higher premium. So be it. Out of curiosity, guys, what's happening this week and why? Any ideas what's happening this week and why? Lots of earnings, 105 S&P 500 companies have earnings this week. So who was that? Yes, Dan. This is an earnings week, or as I'm going to tell you, it's headline driven. Headline driven earnings for this week. I can go ahead and make a couple comments. Earnings are beating on the top line, right? Which I believe, and I'm sorry if I'm wrong, earnings per share, and missing on the bottom line, which should be revenues. Weak guidance for the most part. Now, I could use IBM. I could talk about, I could talk about quite a few. The short answer is, it's not just bellwethers, though. It's not just IBM. It's all the way across the board. Well, Kevin, what about Johnson & Johnson? Okay, so we have a couple good ones. With that said, I haven't seen any of the banks that have justified higher prices and better earnings. In fact, every single one, Bank of America, Goldman Sachs, I can keep going. Bank after bank after bank. Sucks. Worse revenues than the year before. Year over year quarterly returns are significantly worse. I don't see the growth. It certainly isn't coming from the higher interest rates. I don't see it. I'll be the first one to tell you. In my opinion, it's not there. I don't understand why any of the banks are growing higher, because the numbers don't add up. I don't mean to sound so negative, but if you take a look around, you're going to notice that we just don't have some things adding up right now. There are just some things that are not making a whole lot of sense. And once again, as I looked at the basic numbers that I always look at, I'm worried about our stock market. I would expect sell in May, go away, and I guess I'm looking at hopium. Dan just made a comment. Intel down tonight, Yahoo up. Why would Yahoo be up? Because of speculative buyout? Because their numbers look better than last year, last quarter, which was pathetic? I'm a bit shocked. I can tell you this week, there is hope for the ECB announcement, which comes out Wednesday night. Next week, we have the Bank of Japan announcement. It's, I don't know, I just find it unique. I find it very unique. It's some of the positions that we're in for this week, for the market. Anyone know, well, if I can go ahead and just make some comments, the NAB housing numbers, not bad, but definitely not good. The NAHB housing market index came in at a 58 versus an estimated 59. Building permits came in at 1,086 versus an estimated 1,200. Housing starts came in at 1,089 versus an estimated 1,170. So as I take a look at these, we've got about 114,000, right? Because 10,400. A 10% miss on building permits. Housing starts. Not quite a 10% miss, but it's pretty close. Which is interesting because the NBA mortgages have been going up. So we're shuffling around houses that are still on the bank's bottom line, but they're not realizing a big profit off of it. Kind of ridiculous. Last week, we had 8 Fed chairs, including Yellen speak, and it was a mixed bag. Have said, rate hikes in the near future. Have said, well, we're going to go slow. We're going to take our time. We're not going to rush into it. We're going to make sure the economy can handle a rate hike. Verizon's a buyout, Dan. There are also 2 more they're looking to buy out, but the big one, the Light Group or whatever, said they were definitely out of Yahoo. We're in a unique time period. Hey, Steve, you're raising your hands. Would you like me to unmute you to have a comment? And Steve, you go to the question section to ask any questions if you'd like. I'm going to unmute you really quick, Steve, if you'd like to make a comment. Steve, you're unmuted. Do you want to make a quick comment? Alrighty. Steve, go to the question section. As you click on the little plus sign next to questions, it'll allow you to type in anywhere in one of the rectangles. Will allow you to type in and get any questions answered that we can for you. Hands raised again. Okay, so I'm going to unmute you one more time. Make sure you unmute yourself if you do want to make a quick comment here. All right, you are unmuted, Steve.
It was just a mistake. I'm sorry about that. I am on iPhone and I touched by mistake.
I can't hear you, though. Let's see if anyone else can.
I say it's just a mistake. It was a mistake.
Okay, no worries. All right, so I should say, anything you think I've missed this week, anything that's going on that you guys think maybe I've missed? Anything that we should definitely be making a comment on what's happening in our market right now? All right, so if there are no comments, let's talk. We're already, I think our markets are going to end this week. I'm really struggling with saying higher. Homes will have some impact. Abraham, homes are truly it's a market driver. So when you say, well, homes have some impact, yes. But homes have been down. Building permits, housing starts, they've been down, not up a bit, they've been down. So I guess where I'm going at by having the homes, doesn't seem to be looking all that good. I'm not going to buck the trend. I'm just going to say up slightly. But I don't understand how our market's going to be up slightly, and I guess that's what bugs me so much. I don't have a good reason to tell you, hey, our markets are going to be up slightly, because I can't define it. I don't know where I could start by telling you, hey, our market's going to be up slightly, and here's why. I don't see the catalyst right now, and man, it bugs me. It bugs me because I can't see it. With that said, let's take a quick peek at our charts on our market. Let's see what they're looking at, where we're going at there. Give me a quick second to get my stuff up. All right, screenshots. And it'll pop open here in a quick second. Come on, computer. I've got a slow internet today. Come on, come on, come on, come on, come on. Goodness gracious. There we go. So, taking a look at the Dow. Pretty interesting. Pretty interesting that literally, I made the comment the other week, we're bullish. It looked like a cup and handle, but we've broken out of our handle range. In fact, technically bullish, broke above the cup and handle pattern, which is what you're supposed to do. Slightly overbought, right? And MACD is flat right now. Chart's giving us, again, I don't say no man's land, but it sits there a little bit precarious, right? S&P 500, does the S&P 500 look a little bit different? I thought it was rather interesting today. We had a mixed market. S&P and Dow held some pretty important levels. Dow held 18 today. What do you think the S&P 500 held? For crying out loud, the S&P 500 held 2100. So same as Dow Jones Industrial Average, but we held the 2100 level. NASDAQ, on the other hand, looking at the chart of the NASDAQ, we always got to have one position, one index that's a little bit different. Once, you know, I almost said the black sheep of the family. That's not what I'm looking for. Rarely are you going to have all the sectors participating. Not that you can't, but I found it rather interesting. Let's get the NASDAQ chart. Come on, computer. Go a little bit quicker, please. NASDAQ chart, I think, looks our best. Except you take one peek at that NASDAQ chart, and what we don't like so much on it is the MACD. MACD is also flat. So bullish, break out of cup and handle, MACD flat. But it was down today. It was almost as if it hit a level of resistance that maybe, for lack of a better term, I don't see. I'm not sure I see a level of resistance that's making me worry about the NASDAQ. But I don't get a I don't get a, I don't know, I don't get a good sense of where we're at. It doesn't make a whole lot of sense. I'm just sitting here going, maybe, maybe not. Who knows? And it's that who knows that that keeps me wondering. Really keeps me wondering. Plus, we're not to the new highs yet. I agree. If we were up to more of our new highs, I'd feel a little more worried. But no, we're not up to our new highs. We still have room to run. We still have room to get above maybe 5,000. But it seems like that 5,000 is going to be a level of resistance. And you can go back all the way from December, November, and if you drew a line there, 5,000 is definitely a line in the sand. 5,000 is definitely a line where, you know what? 5,000 might be the number to break. Interesting though, it should have been 2,100. We broke above it today and stayed above it pretty easily. 18,000. We held 18,000 today. Wild day looking at it minute by minute. It's really interesting to take a peek and to see. Where will April end? I'm still going to call 2.5% on April. That's nothing more than using more or less a historical average, a little bit higher. Earnings, tons of earnings. I stuck what I can in there. The reality is I'm paying some specific attention to Intuitive Surgical, which happened tonight. I've got JCI, Under Armour, Visa, DH Horton on Thursday. Bellwether, Google reports on Thursday. That's one that can move the market. Interesting one to watch on Thursday. GE, Honeywell, Caterpillar, McDonald's. We've got so many stocks that the good news is not one should make or break our movement or our futures this week except for Google. Johnson Johnson the other day, Intel was afternoon. So yeah, I don't see a whole lot there that makes a whole lot of sense to me. Thursday, ECB announcement. If they say they're going to weather the storm, they're going to give some stimulus, says that they've already started some type of asset-backed purchasing, we can definitely see the markets go higher from help from Europe. Be another interesting, bit of an interesting chart to look at. Interesting opportunity for maybe Europe to give the U.S. a bit of a push, which obviously we could use. We're somewhat stalling out, so we could use a big push to help our markets out right now. How am I looking to trade? As I said before, I'm looking to roll puts up. Since we've had our move the last week and a half, a little bit more than I expected, I'm going to pay a little bit more to protect at a higher price. Guys, questions, I'm going to open it up to you. Any questions you guys would like to get answered that I can answer for you, please feel free to ask. I trade 4 different accounts. Is it a good idea to treat them as one big portfolio and split 8 to 10 trades amongst them? Yes, most definitely. I'm starting to monitor all the third-party trades I have going at any given time between the 4 accounts. Often miss things. Do I work this week? It's hard to watch all of them. Yes, in fact, Dan, I'll be honest with you, I'm a fan of Trade Monster. If you don't mind me asking, Dan, who do you trade with right now? Thinkorswim. And they should allow you to toggle between accounts, correct? Okay, so here's what I'm going to tell you. Your higher beta names should be in a Roth or an IRA. Something that's a higher beta that you possibly are going to have higher returns on as you're booking profits from bigger swings in the stocks, you want to keep in a Roth or an IRA. Kevin, it's my retirement. Everyone says your Roth or your IRA should be conservative. That's true when they can't protect the positions. On a Roth or IRA, should definitely be a stock like Intuitive Surgical, Netflix, Google, the big higher beta, bigger swing stocks. You want those in a tax-deferred account. That would also go for some more of your spread trades. Spread trades, since you're going to be charged by the federal government as an earned income tax rate on those, spread trades should also be in those accounts so that you can defer your taxes and not overpay the government is what I'm trying to get at here. Well, Kevin, what do I do with a personal account or a trust account? Those will probably be more of your collar trades where you don't have to get out of positions if you don't want to, and you can hopefully stay in stock for a longer period of time, or how would I say, not necessarily a longer period of time, but where you can choose to stay in them a year so it can pay your long-term capital gains. As for how you break it up, the reality is it comes down to what kind of bill structure you got to pay. Hey, Kevin, I've got I need $5,000 a month to live off of. Well, if you need to pull $5,000 a month out, then obviously you're going to be looking at paying some taxes. And the key is obviously how little taxes can you pay through your process of going through your trading. What do you think? Is there something I've missed? Or Dan, if you want to ask a more specific question, fire away and let's see if I can't do a better job of answering your question for you. Perfect. All right. Managing 35 trades, awfully difficult, but I want to remind you, the collar trade is how a lot of real wealth is gained. That collar trade where you're picking up more shares, paying you more dividends, maybe reinvesting those dividends into some more stock ownership, a lot of wealth is made in that collar trade. We're going to have mostly callers, so there you go, Dan. Dan, your higher collar, your higher beta stocks that you might see some really big returns on, in case you do need to get out of them, higher beta stocks are going to be in your IRA or your Roths. Any other questions, guys? Just some things to think about, right? It's kind of funny. I spent a lot of time with Jeffrey going over some trades. What do you think about this? What do you think about that? There are some things we disagree on, but the neat thing is I think I really add to Jeffrey when it comes to taxation. Jeffrey doesn't think about taxation. I got to think about it all the time. Taxes suck. Would you consider nearly steadily growing sales quarter after quarter for at least the last 7 years a feature that makes a solid card? Yes, Abraham. Obviously, solid growth is very important. Now, I want to put an exception in there. Apple has solid growth. Apple has extremely solid growth. But Apple has too many numbers to beat. So you're looking not only for a fundamentally sound company where 10, 15 years it has quarter after quarter growth, you need to see movement in the stock. General Electric, Ford, typically not some of the better some of the better collar trading stocks, because sometimes those suckers just don't move. You sit there and you're going, man, move, 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 and they don't. So in your fundamental research, yes, it's always nice to have a stock that shows growth. But not only that, you need to see movement in your stock. You need to see some movement that's going to allow you the opportunity to pick up more shares, to make that worthwhile for you, to give yourself the ability to literally continue to gain those share stock positions, not to be something that doesn't move and doesn't give you that same opportunity to pick up more shares of stock. So just a heads up, obviously keep a hold of positions that move so you can pick up those extra shares of stock. So solid rock and roll stocks. Yes, great way to put it. I couldn't have put it any better than that. Any other questions, guys? And guys, I hope you know this is a point where you can give some real questions. This is where you can say, hey, I've got this, I've got that. I'm licensed, bonded, insured. I'm able to help you and answer, real trading questions here, whereas Jeffrey has to be extremely careful with the Dodd-Frank rules and the fact that he's in education. If there isn't anything else, I'd like to thank you for attending today. My pleasure to be here with you. Guys, have a safe end of the week. We have the VIX down at 13. So with the VIX down at 13, I would expect to see some more volatility into the end of the week. It just seems like the VIX bounces as it hits 13, which it is at right now. So just something to keep in mind there. All right, guys. Hey, have a wonderful evening, and I'm going to do the best I can to get this posted here this evening for you. You guys take care. Have a good one. I'll talk to you soon. Bye-bye.